Hi everyone and welcome to today's morning report on Thursday the 7th of May with me, Rich Perry, market analyst at Hantec Markets. It is polling day for the UK, and the general election generally does tend to see volatility coming through on sterling and FTSE 100, and that seems to be what we've seen early on today. FTSE 100 is down 100 points at the moment, and it certainly seems as though the selling pressure is kicking in due to the uncertainty of the election outcome. Sterling, not so bad. It had a bit of selling pressure early on, but it's sort of reclaimed a fair bit of that ground as this European session has started to sort of develop. The moves yesterday that we saw were fairly strongly dollar negative, and that came on the back of that ADP number that was so weak, so disappointing, and it suggests again that non-farm payrolls this Friday could well be fairly disappointing as well. This move on the dollar is now putting pressure, or certainly now seeming to break this 10-month uptrend that the dollar has been in. It certainly looks as though the dollar bulls are under significant pressure, maybe even completely now lost control. Now what we've got to also impact on the markets is this oil price that continues to rise, and also look at these treasury these are the bund yields, sharply higher on the bund yields, and if I change this to treasury as well, you can see that treasury yields are also spiking higher, continuing to rise, and now through the March high and to the highest they've been in 2015. So incredibly strong moves there on the bond markets that we're seeing, and that is being reflected. That sort of selling pressure on treasuries has been reflected in the caution in the on Wall Street markets. The S&P 500 down 0.5% yesterday. Asian markets are lower overnight, and as I said, the European markets are under pressure today. Now, there's not a great deal of economic data out today. Oh, first of all, this is the oil stocks. First time since early January that the oil inventories have actually fallen this year, and that certainly reflects this continued improvement in the oil price that we've seen. Now, weekly jobless claims at 1:30 today is the only real bit of economic data we've got to look forward to. 280,000 is the expectation there. And that generally does tend to have a bit of an impact on the dollar, but I certainly think that generally speaking, the traders will be beginning to look forward towards that payrolls data that we've got out tomorrow. Now, it is polling day in the UK, so it's probably best that I look at FTSE 100 as my chart of the day, and this is FTSE 100, and what a breakdown it's had. You've had this uptrend intact for the past 4 or 5 months, and that's been decisively broken today. It certainly looks like it's falling away back towards the test of that 67.65 key low that we had from the end of March. This double top pattern here on the break below 6,980 gave us an implied target of 6,860, and that's already been achieved, and then some as well. So what we do is looking at the hourly chart and zooming in slightly here. You've got this already. We've had the initial support at 6,940. That in the last few minutes has been broken. Sorry, 6,840 area. 6,850 area, has already been broken, and the next support you would argue is around that 6,800 level, but the 6,765 certainly looks to be on course for today. The momentum indicators across the board negative on the hourly chart, and suggesting that this momentum is building to the downside. This on the daily chart, the momentum is also negative, although the MACD lines are not quite suggesting a significant breakdown yet. However, the stochastics are bearish, and also the RSI is falling away, so certainly pressure is on the downside on this chart. Now, in terms of selling selling opportunities, if chart's just decided to freeze on me annoyingly. That's not what I want to happen, so there you go. Right, okay, so I would say that 6,900 is your initial resistance high, because that was the low from yesterday. That area, which 6,900 is also a historic pivot level as well, so I'd be using that as a selling opportunity if you got it, although that is 70 pips higher, so 70 points higher from where we are at the moment. So maybe you'd be looking at selling any sort of reasonable intraday rally, because I certainly think that now we're going to be seeing a test of that 6,765 low, and maybe even if the selling pressure continues, then you could see a test of that March low at around 6,700. So downside pressure is on sterling at the moment. That is usual around this around the uncertainty of the election, and it could well take off. So bear that in mind when you're trading today. So I wish you good luck in your trading, and I'll speak to you later.